Welcome to another video, guys. If you're new here, I do in-depth analysis of all kinds of things. I cover disruptive technologies. I cover these SPAC mergers. I cover more traditional stuff too, like dividend growth investing for passive income and analyzing individual stocks to buy now. This particular video is on the SPAC topic. I'm actually working on a series of these. This is number 7. I'll link the entire playlist of all of them up above here. And on this one specifically, we're going to cover the NGA SPAC that is merging with Lion Electric. Let's get into it. Okay, so I've got a bear case and a bull case put together for Lion Electric in this particular deal, but before I get into the points that are supporting both of those bull and bear cases, we'll start off with a little bit of basics on the two companies. So NGA, for those that don't know or are not familiar with a SPAC, it's this idea of putting together a huge pot of investor money, going IPO with essentially a shell company that does nothing, it owns nothing, and then it goes out and it finds a private company to acquire in what's called a reverse merger. So it's a unique opportunity because you can actually buy shares in the SPAC company, the shell company, even before it has announced a deal. And you can recognize some pretty impressive growth if they eventually find a really solid private company to invest in. So that's what's going on here right now with NGA. This one is a moderately sized SPAC company. I think there's a couple of notable things here. One is the investor team is very strong. There's a director here named Ian Robertson. This guy was actually the founder of Algonquin Power, which is a major utility company here in Canada. They've invested heavily into renewable energy over the years. They're a big success story. In terms of the deal itself, the terms that were announced would value Lion Electric at $1.5 billion. They will get $500 million in cash out of the deal, and $200 million of that is this PIPE investment, this private investment in public equity. So that's a moderate amount of PIPE. PIPE will sometimes cause a bit of a drop post-merger. Sometimes these PIPE investors are looking to get out very quickly. The $200 million is not a huge number, but it could contribute to a little bit of that sell-off. And the deal, as announced, currently will close in the first quarter of 2021, so probably into March timeframe. And at that point, the ticker symbol will change from NGA to LEV. Okay, so Lion Electric, they're actually at the moment a fairly small little company based here in Canada, in Quebec. They're manufacturing mostly school buses, but they've also gotten into the electric truck business. They're playing in this larger truck space, this class 6 to 8 vehicle, along with school buses that they're building right now. I like the fact that they're a from-scratch builder, so they're not repurposing or converting existing gas and diesel vehicles, but they're actually building their own vehicles from the ground up with their own technology. And they have a plant operating here in Canada that's currently producing 2,500 vehicles a year. Some of which are on the road. They have about 300 units sold, and they have some orders in the pipeline. So they're a little bit further along than some of these other players, although on a very small scale. And, given that, you can actually buy their vehicles right now. They're actually being actively sold and actively produced. And like I said, they're based in Canada, but they're actually in the process of looking for a site for a second plant in the US, which is a key move for them. It will allow them to be compliant with this Made in America policy and be able to sell directly into the US marketplace.
What's the upside potential?
Okay, so point number 1 on the bull case here is that I like the fact that injecting money into these guys now makes sense. I think that the whole SPAC business model attracts these companies that are looking to capitalize on the hype, especially in the EV space, and they're kind of going public before they're ready for it. And really, I love the fact that the only thing missing, to my mind, in terms of Lion's business model is the capital that they need to fuel expansion and growth. And that's exactly what you want to see in a company that's going public by any means, whether it's an IPO or a SPAC, is that you want all of the ingredients for a successful business to be in place, except the money, right? And so then that's the last ingredient that gets added. The money gets dumped in and, all the constraints are lifted and they can recognize that growth. Point number two, given the fact that they're here in Canada in a relatively small market and they're a success story for the Canadian government, they are going to enjoy strong domestic support. And they've enjoyed it ever since 2016 when the government has been very tight with them. They've had a lot of success already at selling school buses into the provincial governments. It's such a great story for both the provincial and federal governments to show these EV deals happening. So I think the public sector within Canada is going to be all over these guys in the future, and they're going to have that strong base of support domestically. And you can see this already with a couple of deals they have here with Canadian companies, including CN, which is a pretty significant deal. I think this is actually better for these guys than the Amazon deal, to be honest, because Amazon is kind of just testing their waters here. They're dipping their toe in with tons of manufacturers, these among them. But CN is a serious player. They're going to buy a lot of trucks from these guys. I think I said in the intro that these guys have their own tech, and they have all of their own tech, which is really impressive. And, you know, they have their own batteries. They have their own software developed from scratch. So given that, I think they're in a really, really good position to bid on these larger contracts and do customized builds if needed. And they can pivot very quickly depending on what the market wants, what large customers want. So I think they're going to have a very, very good ability to not be constrained by some of these other issues that conversion players are facing, right? In terms of buying bodies from somebody else and then building out a vehicle. These guys own everything and they have the ability to line up with requirements very precisely. And you know, for the parts of the build that they don't have, obviously they can't make everything, but it seems as though they have a really solid handle on their supply chain. They're announcing strategic deals left and right with all kinds of folks, Blink, Romeo on the battery side. So it seems as though they've gotten their supply chain nailed down with good, solid North American suppliers, which I think is a really, really good story. The supply chain for these EV manufacturers is a real weak link. If they can't nail it down, I think these guys have. Point four is the total addressable market here on both their market segments, on both the trucks and the buses. I think both stories are really good. I think that they can grow in the early days with the numbers that are available to them in that school bus market and those early stage deals they're striking. And as they're showing in their own financials, right, is that the trucks will at some point eclipse that business. It's going to take a little bit more to get into that truck market. But, you know, their estimates, at least, of the total addressable market on both the truck and the bus side is really impressive. And given the competitive landscape, I don't see why they can't capture a pretty good chunk of what looks to be a really good-sized market here. And there's a lot of pressure driving that market opportunity too, right? In both Canada and the US, you know, the Biden administration is going after, 500,000 school buses by 2030 to convert them over to ZEVs. Canada's doing the same thing. Like it's such a great story politically to convert school buses over to zero emission. These guys are in a great position to deliver on that. And the large truck market is also really a key target of regulatory change because it's a lot of bang for your buck, right? In terms of converting over these enormous polluters, in terms of these class 6 to 8 vehicles, you get a lot more bang for your buck. And so governments recognize this, and policy change is heavily targeted at this large truck market. So point number 5 has to do with the financials here, and I want to say two things about their financials. One is that the growth story not only looks really, really impressive, a lot of really high estimates behind their growth, but not only that, but I believe that they have a plan to actually get to those growth targets, unlike some of these pie-in-the-sky numbers that you see. If you look at what they're doing with the transaction proceeds here coming out of this deal, they know what they're doing and they know when they're doing it, right? And the second thing I would say is that although these are some pretty astronomical numbers, I think they're supported by a couple of key things. So if you look at their total units sold, they call attention to it right here and say that 100% of their next 2 years production capacity could be met by their existing plant, which is pretty impressive, right? They already have the plant in place to produce the vehicles they would need through 2022, and that is going to lend some credence at least to these early stage revenue projections on both the truck and the bus side of things. So I like that financial plan. I like the fact that they are projecting free cash flow by 2023 in spite of the R&D and the capex that they're going to incur over the next couple of years. I think it's a nice balance. I think they're investing enough in the business to grow the business, but still achieve profitability in a reasonable time frame. 2023 to turn a profit in terms of free cash flow is pretty darn attractive in terms of an investment. And another thing I'll call attention to on the financial side is that they have a nice diversified revenue base across customers in different industries and that do different things. And I think that story will only get better as they get into some additional things. You know, they're in the early stages of producing a garbage truck. You know, they're going to produce an ambulance at some point. So that diversification across the customer space is really, really important, because I think adoption rates, you know, in different industries is going to vary. Government subsidies is going to vary. The speed at which those different customers are going to take up EVs is going to vary. So by spreading it just a little bit, just enough, so you don't get distracted, I think is a real key advantage for these guys.
Let's talk about risk.
So number one in the bear case here is the pipeline seems a little vague, and there's a bit of a disconnect here to my mind, because they actually are producing vehicles, they have vehicles on the road, but their pipeline, at least their definition of the pipeline, is very, very fuzzy. They don't seem to really commit to a number of committed orders. I think I think the indication here is that they're struggling with some softer proof of concepts type stuff, letters of intent, you know, these early stage orders. So I really get the impression that they're not as far along in terms of the committed pipeline in the sales cycle that they would like to be. And I think they're sort of fuzzing it a little bit here in the investor presentation as a result of this. There's a couple of good stories around CN and the like, but I would like to see additional detail on committed customer orders to support some of these revenue projections. Point number two here is a bit of an unusual thing. I kind of scratched my head when I saw this. They are actually giving some equity away to customers in a deal that they've struck that has to do with, you know, a number of units sold into a customer will actually grant the customer options to purchase an equity stake in the company. So the details of this seem to be a multi-year purchase agreement to obtain an incremental 6% stake. So right now, whoever this customer is has a 1.2% stake that could grow to a full 7% stake if they hit that $1.1 billion spending target. So they don't say who this is. They don't release a lot of detail. And the thing that makes me hesitate just a little bit is I'm wondering why they feel they have to do this. They seem to be in a really, really strong position. So why they're giving equity away at this stage to get orders is a little strange. What I think might be going on here is this might have been something that they agreed to when they were earlier stage in order to get into a company to make use of their fleet for early stage R&D and proof of concept work. This may have been a deal that was struck when they were in a weaker position than they are now. Point number three has to do with competition. These guys do not have a lot of credible competition in any of the spaces that they're playing in, except for Tesla. The Tesla Semi is potentially a direct competitor to their Class 8 product. You know, I think the Tesla Semi has had all kinds of delays, you know, lots of overpromising and under-delivering, which is what Elon tends to do. So it's hard to say exactly when the Tesla Semi is going to become a viable competitor. I think that the good news story is that in the early stages of this market, there is way more demand than supply from either of these companies, Tesla and Lion. So I don't think it's a big deal in the beginning. We would have to know a lot more about how the market develops and about how the Tesla Semi develops to see if it's a viable competitor here. Okay, guys, let's wrap this one up. Clearly, I think you can tell here that the bull case is an absolute winner. I had a really hard time even finding points for the bear case on this one. Anything under $20 for this one seems like a ridiculous price. I think it's trading at about $18 as I record this video, and I'm really scratching my head as to why. This seems like an unbelievably good deal. I think this is one of those buy now, hold forever, and recognize a ton of growth go forward. Obviously, this one is subject to the same risks that any SPAC is, that any early stage EV company is. There's going to be a ton of volatility and all that. And that's the story, guys. Please give the video a thumbs up if you liked it. Hit that subscribe button, ring the bell, and I'll see you on the next one.